The market value of any interest, either freehold or leasehold, represents the discounted value of the predicted future benefits derived from the ownership of that interest. Thus, the purpose of any valuation is to calculate those benefits and derive its present value. This video reviews the benefits in relation to leasehold valuations. A leasehold interest is an interest in a property, for the number of years, arising from the lease agreement. The value of a leasehold interest arises in circumstances where the leaseholder could or has sublet the property at a market rent that is greater than the rent currently being paid to the freeholder. The net balance of income is known as the profit rent. In the case of a leasehold in possession, the value of the leasehold interest arises where the estimated market rent exceeds the rent currently being paid to the freeholder, thereby giving rise to the estimated profit rent. Please like, share and subscribe for more videos and write your comments or questions. For short leaseholds, 50 years or less, the valuation of a leasehold interest is the discounted value of the finite net cash flow of the leasehold. Historically, valuers have attempted to use implicit methods that try to allow for the growth experienced in the investment and to allow a leasehold investment to be compared with the equivalent freehold. If a leasehold investment has two non-reviewing leases in place, then the income profile being acquired is a fixed income for a defined period. If the covenant strength of the tenant is strong, this would be equivalent to a fixed income for the same duration, but not as valuable as a government bond, or other strong covenant bond. A bond is continually repriced to derive its capital value as the present value of a finite cash flow with a known and guaranteed redemption. Short leaseholds lend themselves to valuation by the explicit method. The target rate may be determined by reference to the gilt market with a relevant risk adjustment for the additional risks of relative illiquidity compared to a government bond, repairing obligations 18 and other costs associated with a leasehold property interest. For leaseholds which are not underlet to government or other strong covenants, or for leasehold interests longer than 50 years, the implicit method may be appropriate. It would be more appropriate in such cases to consider sales evidence of comparable leasehold interests drawn from the property market than to make an adjustment from bond market pricing. Where a leasehold property has a rent review in the sublease, as the growth is applied explicitly to the market rent, the effect of the gearing can be allowed for within the calculation of the profit rents. Long leasehold interests in possession, 50 years or more. The valuation of a leasehold in possession can be approached in much the same way as the short leaseholds described above, except that the market rental value would need to be estimated. It should also be borne in mind that potential purchasers of a long leasehold interest in possession are likely to include occupiers as well as potential investors, which may affect pricing, although this would need to be ascertained from market evidence. Long leasehold investment interests, 50 years or more. The valuation of long leaseholds has traditionally been seen as a subset of freehold valuations. The implicit valuation approach is generally used, and a risk premium is added to all risk yield. Obviously, changes in the future cash flow because of rent reviews can be projected by reference to the lease documents and where appropriate market rental levels. Also, explicit techniques could be used, which would depend on the availability of comparable. The longer the lease, the more appropriate the implicit method would be, with shorter interests lending themselves to a discounted cash flow approach. In all cases, the valuer should always analyze and reflect market evidence. In all valuations, comparable sales or rents underpin the valuation, but in the case of leasehold, the valuer needs to pay particular attention to the veracity of the comparisons. If you have found this video useful, please like, share and subscribe for more videos and write your comments or questions.